Hello, and welcome to the Integrity365 Financial Insights Podcast. My name is Sophie Haslehurst, a Chartered Financial Planner at Integrity365. As a specialist in tax efficient investments, my role often involves helping business owners and entrepreneurs maximize their wealth. But here's the challenge. Many business owners are so focused on running their businesses that retirement planning often takes a back seat. But it's a really important step in building your life after retirement. So that's why today we're diving into how business owners can plan for their future in ways that are both time efficient and tax savvy. I'm delighted today to be joined by my colleague at MacDonald Partnership and fellow independent financial advisor, Bradley Cross. Hello, Bradley, and welcome.
Hi, Sophie. Thank you for having me. You're right, this topic is huge and it's something business owners can't afford to overlook. The way we approach retirement planning for business owners is very different from the traditional routes because there are sort of unique factors that only come into play when you're running a business. One of the big considerations we should start off with is maybe how business in itself can support your retirement. One of the first port of call can usually be pension planning, as it's sort of a tax efficient way to take money out of the business.
And how come it's tax efficient, Bradley?
So pension contributions are an allowable business expense for corporation tax purposes. So if there's a large amount of cash sitting in a business, one of a good way of getting that out of the business cash account is to put that into a pension. So it's beneficial for the individual as once it's in a pension, it can grow in a tax efficient manner. And in addition to that, the pension contribution itself is an allowable business expense for corporation tax purposes. So the business gets could be up to 25% relief in making that contribution into the employer's pension or the employee's pension. Are there any other sort of things that business owners should be considering, Sophie?
Definitely, Bradley. So obviously, as you said, when they make employer pension contributions, it's offsettable for corporation tax. So that's saving them money. It's also worth bearing in mind if you're not taking that money out as income, then you're not having to pay, income tax, be that as dividends or as income. So you're saving income and national insurance potentially. But then there's also the factor that, you don't want to keep too much cash in the business, but also you need to start building up assets that aren't inside the business. Now, that often means you might need to pay a little bit of tax, but building up, say, an ISA portfolio is also another really good way of being tax efficient. And I know something we've talked about before, Bradley, as well, is about maybe making the family part of the business.
Yeah, I'm sure I've come across where some of the family members might be involved in the business. So if they are, then they could potentially look at making pension contributions for them as well, particularly if they're involved in the running of the business. So it's worth picking this up within the sort of accountant when they're looking at pension contributions.
Definitely. And I think the main thing is the sooner we get involved, the better. Because although they might be in the sort of early stages of the business, there's so many different ways in which we can be a bit more tax efficient and start saving up for when the business is eventually sold or passed on to that next generation. It's also a really important time for us to be considering things like protection as well. Because what we don't want to be doing is, we want you to be able to retire like a CEO, but that also involves protecting that business, which is going to be your sort of your main focus for earning that money throughout your lifetime to then be able to retire. So we'd always consider all options when it comes to any form of protection, but especially around making sure that business is protected. So things like key person insurance, if anything were to happen to you as an individual or other key members of staff, but also income protection and things like that. So the business can continue in the same way, even if you're off sick for any reason.
That's definitely worth considering, Sophie. I think retirement in general is such a massive life event for everyone. This is intensified when you have the added consideration of what to do with your business, maybe that you've nurtured for maybe longer than your own kids. So, Sophie, could you explain to me when is the best time to start this sort of journey?
So as soon as possible, as we sort of said. So my personal feeling is it's never too early to seek some financial advice because the sooner we get plans in place, the less we have to contribute to them to have a bigger outcome. And, the easier it is to start planning things around what that might look like. It works for every stage of the business journey. So the sooner we're involved, the better. And then as we're getting more towards retirement, that's when we can start to think about how that business is going to be passed on to the next generation through sort of maybe gifting some shares and then taking a step back. But also, it helps you emotionally start to focus on what's going to be important to you post retirement. Most people are hugely emotionally involved in their business, as you sort of suggested, they're raising their business like they are their children. So it's really important that they're getting some independent sort of advice to be able to help support them on that sort of journey through to retirement. And I'd always say, you're never going to leave it too late because we can always help at any stage, but the sooner the better because we can start to put those plans in place, but also continuing to review them. So a lot of our clients are very busy and we can be doing a lot of work in that, the background. But if we're getting involved and catching up at least annually, that means we can be there to sort of help support them through legislation changes, which, as we both know, there's a lot going on at the moment, but also changes to them personally. You never know what might happen. I've had it before where there's been children that weren't expected born or grandchildren, and suddenly the whole world can change for them. So we can be there to support them on that journey.
No, I think what you said there, when legislation changing on a regular basis, and when you've got the likes of yourself who keep on top of this on a regular basis, it just allows you to spend a little bit more time in nurturing and growing the business in itself. Tell me some of the most important things that maybe business owners tend to disregard while going through this process.
It's mainly themselves and what they're going to do. So if you're achieving a business sale rather than passing it on to the next generation, but either way and exiting that business, it's a process. You're not going to be working full time and then going, right, from Monday, I'm not going to work again. You're going to be involved and there'll be likely a handover of the business. So there's probably going to be a time where you might be working part time or perhaps even becoming a non-executive director and still having an input into the business, which is great because then, you can pass on that knowledge and experience. But emotionally, it gives you time to also focus on that journey. So what's very common, I find, is that people don't know what they want to do with all their free time. Now, a lot of entrepreneurs have that spirit, so they want to set up another business perhaps or that sort of thing. But also, it's about helping yourself on that journey and sort of dialing into what's going to be important to you. So it might be holidays, it might be sort of planning, doing things with the family or, golf, whatever it might be. And so we can be there to sort of help support what that goal is when that goal is no longer growing the business as much as possible.
And what are some of the tools that you maybe use to help sort of identify where there maybe are some gaps or if they're on track at the moment?
So we have fantastic tools as financial advisors and we use cash flow modeling quite a lot. So what we do is try and plan for what that might look like when an income isn't being provided by the business anymore. And that can be quite scary because when you're a business owner, if you do your work, you're going to earn a certain amount of money. So it helps to give a little bit of comfort as well as sort of a projection forward as to where that income's going to be coming from.
I think you're right when you use cash flow modeling, and I think it can help at least highlight that potentially they could afford to sell the business now. And again, they might not even know what they might need to sell the business for. Whereas having a bespoke cash flow modeling for that particular individual can sort of help the process and give them a little bit more comfort going into retirement or selling or perhaps just taking a step back from the business.
Definitely, definitely. And I think what I would also say is that a lot of our clients are very time poor. So they're really, really busy and they might think, oh, I don't have time to dedicate to this. But that's where we can come in and be a really great support to them. And sort of we can liaise directly with their other professionals. So you've mentioned accountants, but if there might be a business sale, there's likely to be solicitors involved too. And maybe even in the way that their wills might be tweaked a little bit, depending on what's going on with how the business ownership is managed. And we can deal with all of those other professionals without the client having to be involved on a daily basis. We'll obviously work with the other professionals to be able to provide them the best support, but it can be really useful for people like a lot of our entrepreneurial clients who are always very busy and always sort of going after the next project for us to be able to take that burden away from them.
No, I think you're right there when just having that open discussion with the professionals just to make sure that the client's looked after is very important. Do you want to tell me how some of the clients could potentially replace their income in retirement?
Yes, so like I said, it might be that there's still a level of involvement in the business, so such as still being on the board or being a sort of non-executive director where they've got some sort of touch points. It's likely that they're going to need some other form of income. So the chances are that they'll either get a lump sum business sale or it'll be some other form of sort of income provision needed at retirement. So we always would look at sort of like obviously pensions, as we've mentioned, a really tax efficient way to save for retirement. We're probably also going to have some other forms of investments in there as well, such as ISAs. And altogether, what we'll do is we'll plan the most tax efficient way for them to provide an income from these assets. And again, that's why it can be really great to employ family members or your spouse, because then you're both going to have personal allowances to be able to utilize. You're both going to have basic rate bands to be able to utilize, as well as those tax-free ISA portfolios. That altogether is going to be a great way to help build that retirement income.
Yeah, and just going back onto that sort of cash flow modeling tool, it might be a case where the client actually might have too much money upon passing. So there could be some tools there to maybe look at potential inheritance tax planning and maybe looking at the client's overall sort of future and sort of planning for their family in future. So yeah, thanks, Sophie. So I think we've covered off some of the headlines there with the likes of keeping involved with other professionals when going through the process of maybe hanging up the boots with the business. Also looking at tax efficient ways to get money out of the business potentially, and looking at that sort of future planning for generations to follow. Thanks for having me, Sophie. I'm sure there's so much that we could cover off on this topic. So if anyone has any follow-up questions or would like to discuss your retirement planning, please do not hesitate to get in touch using the details in the description. Don't forget that you can catch up with previous episodes on YouTube and Spotify. Thanks everybody for listening and for having me along, Sophie.
Thanks, Bradley.